2020?
So my name is Jill Howard Larsen. I'm Global Director of Due Diligence at AWS TruePower, which is a UL company. Looking at the next 3 years through to 2020, then my belief is I think the industry will remain strong. I think we'll see an uptick this year compared to last year. I think 2019 will be probably a larger year, and then we'll see what happens in 2020, but I think there will be an upward trend. I think risks will very much be really how different tax equity respond to the tax reform that took place at the end of last year. Many of the tax equity that we worked with last year have already started projects in 2018. So, I think some of the indications are good, although the sponsors will be taking additional risks. The volume will be, I think, slightly lower, from tax equity. But that's something I think we're really going to see play out over the next few months. But certainly the major tax equity that we've been working with over the last few years are still pursuing deals this year. I think power prices are really still continuing to trend downwards. We've seen a race to the bottom over the last 2 or 3 years. Each time we think we've seen the lowest PPA price we thought we were going to get, then a few months later we see something that's even lower. So I think that will continue maybe over the next few months, but I think it will bottom out. Again, we'll wait and see. Not quite sure how low it's going to go. We're also seeing equipment prices go down. So each time we see new turbine supply agreement pricing from whether it's Vestas or GE or Siemens Gamesa, then it's lower than the last turbine supply agreement that we saw. We've seen a fairly significant decrease over the last couple of years, probably around about 15% year on year. But at the same time, we're seeing operating costs go down from long-term service agreements from the same suppliers. So overall, the costs are going down, and I think that's really essential as the industry approaches the 2020 PTC cliff. So we get to a point where we will be competitive with really all other sources of power after the PTC goes away. And I think the 3 years that we have is really going to allow that to happen. And if we compare with equipment pricing that we're seeing in some of the other global markets we're working in, particularly in the Mexican market and South America, then if we compare that with some of the North America prices, there is clearly some room for pricing to continue to go down over the next couple of years. So we do expect to see that. And then at the same time on the energy production side, then we're seeing longer rotors on the turbines, we're seeing higher hub heights, all of which is contributing to, again, decreased cost, increased efficiencies. So over the last 2 years, maybe 3 years, we've seen, as independent engineer, we've seen many of the current corporate offtake agreements that are in the market. So we've reviewed Google agreements, Amazon, Home Depot, General Motors, most of the key corporates who are active right now. If we look at the split between corporate PPAs and either hedge agreements and utility PPAs, then we're probably looking at about a third to 40% of corporate PPAs, and we're looking at about half utility and co-op PPAs, and then probably about 20% on hedge agreements, with hedge agreements really being more in Texas, Oklahoma. We are still seeing the utility PPAs, but we're seeing more of them from co-ops and municipalities, with the exception of, say, the Excel energy PPAs in the market. And we're seeing slightly shorter terms from the corporate PPAs than we're seeing on the utility PPAs. We're seeing, obviously, basis risk with delivery points being to a hub rather than at the bus bar. We're seeing more risk in energy production requirements on the corporate PPAs. And we're seeing shorter terms. Generally, the terms are more in the 10, 12, 15 years compared to 20 years on the utility or co-op PPAs. But I think generally it's been extremely exciting to see the major corporates and major companies that we work with every day. Everyone is buying from Amazon. I go into my computer, I go straight on Google. I go to Home Depot. So companies who are really household names. It's very encouraging and very exciting to see them very active in the power offtake market. And just in looking at the M&A landscape, we've certainly seen a very active M&A market over the last 15, 18 months. For AWS TruePower, then we started at the end of 2016, and we actually represented Brookfield in their purchase of the Terraform wind assets, both in North America and globally. And that was the largest transaction closed actually last year. And we've actually worked on a lot of other, both operating portfolio, M&A due diligence, and greenfield portfolio due diligence, as well as individual projects or a couple of projects that have been on the market. So we definitely see that continuing. We're seeing, I think there's a constant cycling of capital within the market. There are a lot of buyers who are very interested. There are buyers who are interested in greenfield projects that they can really bring to market, reach COD by 2020, with the PTC cycle. So there's, I think, probably more buyers out there than there are sellers. We've also seen recycling of capital within mature operating portfolios. So, just like the Terraform portfolio, which is a result of financial situation, then we're seeing other people, looking to exit the market or monetize their assets. But at the same time, we're seeing quite strong competition from other entrants, whether they're, companies coming from Europe or overseas, or large investment companies who, as part of their strategy, are looking to consolidate portfolios, build larger portfolios, and looking at putting different assets from different portfolios together to make a larger business for themselves. So we certainly expect to see more of that into this year, and I think the next few years. There certainly is the appetite within the market, and each time we do work on a portfolio M&A due diligence, then we do see multiple bidders, and often bidders will come to us fairly early in the process to tie us up as an advisor to make sure that nobody else takes us, because there's a fairly limited number of companies within the industry who can actually perform the work. The players are going to be well capitalized. In terms of the larger portfolios, then you really are looking at 500 million to $1 billion in terms of value. Obviously, individual projects, then the amounts are lower. Financing can be obtained on top of that, but we're seeing large European utility companies who've got very healthy balance sheets to purchase. Obviously, Brookfield's very large Canadian, diversified, both utility and real estate assets. And we're also seeing financial funds, which may include pension money, who are again looking for long-term assets, or looking for something that they can maybe hold for a few years and then flip for a profit in a few years' time. So really seeing a combination, but in each case it's really kind of well-capitalized entities.